All right. Good morning, Helaine. How are you doing?
Morning, I'm good. How are you doing, Blane?
Good, good. Doing well. Doing well. Really excited to be here for the next edition, today's edition of Trade of the Day Live. Really exciting day for the markets. Helaine, you and I were just talking before we hopped onto the right into the room. But here we sit. It's a Fed Day Eve. Tomorrow, is the big Fed meeting that everybody's been looking forward to. We've heard so much chatter about it. So many people have been talking about it, like, oh, the Fed meeting's coming up. What are they going to do? They're going to cut rates, 25 basis points, 50 basis points. What's on the way? So there's been a lot of hubbub about this meeting, and here we are. It's tomorrow. Markets have been performing quite nicely. So, really, really interesting week for the markets.
Yeah, a lot of excitement around the potential cut. So definitely going
100%.
on.
So I know that was the first thing we just wanted to touch on really briefly for everybody, is just talking about tomorrow's Fed meeting. Of course, tomorrow is the next meeting. It's been several months since they actually had a policy meeting, so we do have the next one of three remaining Fed meetings for this year. So we have tomorrow, we have October and December, the rest of the year. And you've probably seen this in financial news, but the markets they've started pricing in the certainty of a Fed cut. Essentially, the markets are saying there's a 100% probability the Fed is going to cut.
Mm-hmm.
We have a Fed and Fed chair that they really don't like to surprise the market. That's just kind of been their history. That's been their MO. If you've closely followed them over the years, the last thing they really like to do is deliver a surprise to markets. When the markets are starting, especially this close into a Fed meeting, saying, we've priced in 100% probability of a cut. And as you can see in this chart right here, this is CME Fed Watch tool saying that the markets and Fed funds futures markets are showing a 96.1% probability that they're going to do just a regular 25 basis point cut tomorrow. So, it's almost already in the books that that's what's going to happen, at least from the market's perspective.
Mm-hmm.
That's what started to get priced in. And Helaine, these rate cuts, the market's been hungry for them for quite some time. They've been,
Oh yeah.
clamoring for this for a while. It'll be good to see rates start finally coming down, helping some of those more rate sensitive pockets of the market.
Agreed. And, as you said, it's kind of baked in at this point. So even though this is exactly what the market wants, what it's been asking for, I honestly wouldn't even think that we're going to see a big pop because of the cut, because this is already baked in. People are expecting it. It's almost 100% certainty. So, still very bullish, but I wouldn't expect some big ripping rally based off of a cut tomorrow.
Yep, I totally agree. That was kind of the next thing I was going to pivot to once we start looking at the overview of the S&P right here is that, of course, a lot of this has already got, started to be priced into the markets. We have been clearly laying out that for, a little more than a month, despite several just marginal new all-time highs on the S&P 500, we have been in a fairly tight range-bound trading, really not being able to crack much above 6,500 for quite some time. Of course, in last week's trading, when the odds and probabilities of a rate cut at tomorrow's meeting started to firm up, and markets started to price in that certainty. Well, then we finally got that reacceleration last week and finally broke out. Definitively above 6,500, and in tomorrow, or excuse me, yesterday's trading rather, we finally got our first close ever above 6,600. So we had a very significant pop higher in the last week's worth of trading. So as you said, Elaine, it's already started to get priced into markets. We've had that rally higher. Of course, we're substantially higher off of the April lows. So the market has run a long way. It's rallied quite a bit. It's rallied right into the Fed meeting. And honestly, in today's trading, we just got that first close yesterday above 6,600. That's a really important milestone. First time that's ever happened on the S&P 500. Not to mention several of the other new all-time closing highs we got yesterday. If you're looking at the Nasdaq Composite, Nasdaq 100, both the Russell 2000 and Dow are, kind of levitating right near their all-time highs. So, broadly in the U.S., stocks are right near, if not at currently at all-time highs. So that's really encouraging. In today's trading action, it's been pretty muted. It's
Hmm.
roughly flat. It's down just a touch on the S&P. And frankly, I'm kind of glad to see that. After last week's move, if we continue to rally, just making, a percent or so gain every single day, leading right up into the Fed decision, if we were up, big again today and up big again tomorrow morning, I would be a little nervous.
Yeah.
What would you think about that, Elaine?
Yeah, I agree. I agree. It feels like leading into these meetings, it's like the quiet before the storm almost. It kind of everything settles and everyone's waiting to see what occurs. And so it seems like leading into these meetings, it kind of everything calms down, and things are fairly flat as we wait just for that final word from the Fed.
Yep, exactly right. Yes, I mean, I'm glad to see that markets are cooling a little bit. Of course, we've had this is four consecutive trade sessions or trading sessions now. The S&P has been outside of that upper Keltner channel band. So, at an
Hmm.
index level, it is a little stretched, and that's of course being replicated down here below in our RSI chart as well. You can see the RSI is, a little overheated right now. It's still above 70. It's at 76, so it's not in crazy nosebleed territory. It's not too high, but it's certainly a little, a little hotter than preferred. But so it's nice to see stocks, coming in a little bit, taking a little bit of a breather, heading into tomorrow's decision. I fully anticipate once we get that news, again, we could see a little bit of sell the news. It could have been a buy the rumor, sell the news type of event leading into this. We've seen that certainly plenty of times. So, if we did get a little bit of a further pullback after the rate cut is announced tomorrow, that wouldn't surprise me either. So, it's really hard to say what stocks reaction will be given the recent run we've had. But regardless, in the long term, earnings have still remained good. GDP numbers are continuing to look really encouraging moving forward. So the inflation has seemed somewhat contained as well. Stock prices are continuing to behave well. So overall, very bullish environment. We get a rate cut tomorrow on top of all that. That should, continue to add to the bullish narrative for stocks. So, Helaine, anything else you want to add here
Nope.
to the outlook for the markets before we hop
Uh,
into our trades?
nope, I totally agree. And I think we're good to go ahead and look at our trades.
Perfect. Well, let me go ahead and pull mine up first since I already have my screen shared. And my trade today, it's one of, it's a very well-known name. A lot of you probably are, customers or maybe even prime members for this company here. This is Amazon, of course. Ticker is AMZN. One of my favorite stocks to trade for quite some time. You get a lot of different opportunities. And, of course, Amazon has been a really strong performer this year. It's been one of the stocks that led us out of those early April lows at the index level. Really strong performer. It's a $2.5 trillion market cap company, so it really carries a lot of weight in the markets. And so, roughly through the end of July, the stock was, ripping higher, making a nice series of higher highs and higher lows. Hadn't quite broken out to new 52-week highs yet, but a really strong trend that it was displaying there, through May, June, and July. And then, right when we turned the calendar into August, stock took a bit of a breather. It sold off just a bit, came in a bit. It had a fairly significant drop, but it started to quickly recover. You can see it started, making it, after it hit these lows here, started making another series of higher highs and higher lows. And the real key thing here is you can see in this compression and consolidation period right here, where it, finally it did not break out above this high here, and it did not break down below here. It was, starting to kind of consolidate in somewhat of if you're familiar with this technical analysis term, kind of a bullish flag pattern. So you're seeing, it's starting to compress here. You're starting to get higher lows, and the highs in this pattern here, we're starting to compress downward too. So generally, we start seeing those two kind of converge in. It's going to break one way or the other. And then finally, as the stock, refused to trade lower, you can see it really had a floor under the stock under these lows here. So there's very clear buying support coming in, supporting the price of Amazon. Well, just about 2 weeks, a week and a half ago, the stock finally broke out above recent resistance levels. So it broke out, it traded higher, made a new shorter term high. So it finally cracked above this high back here, which is a very, very bullish sign. Stock pulled back to the middle Keltner channel, cooling off, coming in just a bit. And, now you can see it made yet another higher low right here, and it's starting to rally once again. So this is really encouraging trading. Of course, it's been a little choppy, a little volatile, Amazon shares recently. It's not as consistent of trading as we've seen here. But just with the current market setup, We've seen a lot of rotation recently. Coming out of the market leaders earlier in the year, you were seeing people rotate out of those into other pockets of the market. I think some of these market leaders from earlier in the year are well positioned to start performing and outperforming through the remainder of the year as we head into the end of December. And I think Amazon fits that bill to a T. So I really like the technical setup here. We still have a nice trend line buy signal. Stock's trading above both of our trend lines here. It's not currently overbought at current price levels. So, Helaine, the way I'm actually looking to target this one is, again, I'm really confident that Amazon's going to continue to trade higher from here. So I'm
Mhm.
actually looking at a directional call option purchase for Amazon. So I landed
Okay.
on the October 17th option expiration date. And specifically, I landed on this call right here. So it's the 225 strike call, and it's currently trading at about 14 points per contract. So 1,400 bucks, just a couple bucks above that. So I'm actually going to go ahead and look to place that trade here live on the call. So I'm just going to do one contract, just a small position size here. But I'll go ahead and set my limit order at 14.1 points for the trade. Go ahead and fire that off and see if we can get it filled. But that is how I would look to go ahead and place this one. It looks like it may have ticked up just a touch, so I'm actually going to adjust my limit order because I would really like to get this one filled here. So I'm going to go ahead and adjust this up to 14.2. So just by a matter of just 10 bucks. But just really want to get that one filled right there. So see if there we go. Just got it
There you
filled.
go.
Yep. So there we go. So that's how I was looking to trade Amazon. And so that strike that I purchased is this one right here. You can see, there's clearly some technical support down at this level. And, with the stock starting to rebound, continuing to get some momentum higher, making that series of higher lows, recently having broken out to a new high. It's a really nice recipe and combination I'm seeing for that one.
I love it. I love it. As you said, some of these stocks that outperformed right after April and then consolidated, they're really in a great setup right now to reaccelerate into the end of the year. So love what I'm seeing there. I love the trade.
Awesome. Well, thanks, Lane. I appreciate it. I'm excited to see which trade you have as well. So I know you had a good one to share too.
I'm gonna get set up right now, but while I'm doing that, Blane, it looks like Holland is asking for a reminder as to where to find recordings of these sessions. So could you work on sharing a link maybe to that?
Yeah, sure thing. Absolutely. I'll go ahead and get that now.
Okay, great. And let me go ahead. I'm going to share my screen and jump into my trade today. My trade is for the e-commerce platform and company Shopify Inc. Now, we have a couple of different buy signals triggered here. We want to see the stock trading above the 35-day EMA, which is a shorter term moving average, as well as the 200-day moving average. That's a longer term moving average. That is to confirm the buy signal for the stock. As you can see, that 35-day EMA is the green line and the red line is the 200-day moving average. And the stock has continued to trade above those well over the past 9 months. On top of that, the stock has been in a consistent series of higher highs and higher lows. After that April low, where we really saw that washout day for much of the market, Shopify began trading higher from there. It wasn't ripping higher. It wasn't a crazy um, exponential move, but it was a consistent move. And then you can see early August, they reported and just knocked the socks off and just they had a huge jump higher. And typically when you see a really big move like this, well above the upper counter channels, we expect that stock and the movement to go down from there. So that's exactly what we saw. We saw that huge move higher on earnings. We saw people taking profits on their positions, the stock selling off back into the counter channels. And then once that happens, we won't jump right into a stock. We'll wait. We want to see confirmation of the resumption of the bull trend because there are times where something like that happens, you see that shoot higher and then it just sells off from there and it continues to sell off. But what we saw is a very bullish sign for Shopify. It made it to the middle channel, it bounced from there, and it started making a new series of higher highs and higher lows. That's a very bullish trend. So with that in mind, and I was looking to enter into a position for Shopify. I also use my counter channels in order to see if the stock's currently overbought or if it's a good time to enter. As we can see, Shopify is currently trading below that upper counter channel, meaning it's in the buy zone and that we can enter a position. I am going to look at a debit spread for Shopify. I feel like those are my go-to. I can't help it. I love debit spreads. You know, they're limited risk, limited reward strategy. They provide downside protection, and they're our most consistently profitable strategy. And I've loved them forever. It's probably one of my favorite strategies. So I'm looking at the Shopify October 17th 130 and 135 strike spread. It's right around 4 points. If I get in at 4 or lower, if I get in at 4, I have a 25% return on the position. So I really want to get in anywhere below 4. So I'm looking to buy the October 17th 130 strike call and sell the October 17th 135 strike call. This is a 5-point spread. I can look to make, if it's trading at 4 when I enter, I can make $100 or 25%. I have downside protection in case the stock drops from here. As you can see, my break-even point is 133.95. Looking at the chart here, 133.95. That is just about at that lower counter channel. So
Hmm.
even though Shopify is on a bullish trend, I think it's going to trade higher from here. This position allows me to profit even if the stock moves against me and drops. So I'm going to go ahead and enter this position. Looks like it's right at 395. So let's see if I can get filled at that. As you know, I'm willing to bump it up in order to get filled. And there we go. I am filled at 395 for my Shopify debit spread.
Awesome. Well, that's a great looking trade, Helaine. I really like the trend for Shopify. As you were saying, you had the big, gap up after the earnings. It sold off, got back down in that gap. So it's like, when that happens, as you said, it can be a little anxiety provoking because
Yeah.
sometimes you get back down in that gap and it completely closes it back down to the downside. But it found some support, started rallying higher, and it looks like now this, stock very well could be back on its way to new maybe not new all-time highs. I can't remember exactly where it traded back in the 21
Yeah.
craziness of the market. I remember that was a big performer, but
It
probably new
was.
52-week highs pretty, on the horizon pretty shortly for that stock. So great looking trade there.
Appreciate it. Thanks.
Absolutely. And I did want to say, everybody, I did post in the chat the link to just our websites where these are archived. So not only can you find the replays uploaded there of the Trade of the Day live calls, but also just the Trade of the Day newsletters as well. So, of course, we do these on every Tuesday and Thursday, but on Monday, Wednesday, Friday, we have just a written Trade of the Day version. You probably received that as well. Those are also archived on the TradeWins Daily .com website, and of course, it's going to be under the Trade of the Day tab. But I just posted in the excuse me, I just posted in the chat the link to the TradeWinds Daily link, so you have that there. And there was another thing I want to go ahead and post in there too, real quick. It's a link I just dropped in there. This is something if you haven't attended one of our live TOD calls before, this is something we talk about a good bit, but it's actually another newsletter that I do. It's my weekly profit opportunity or WPO newsletter. It's sent out once a week. I do a lot of research over the weekends, just kind of similar to how we do today, but I go in much further detail, give you a lot more trade management ideas and how I would look to actually manage the different setups. But essentially what I'm doing is spotting my favorite setup that I think has the best chance at becoming a profitable trade, and actually putting it together, making a nice video newsletter, of the full trade breakdown and send it out to you, heading into the upcoming week of trading. So I send it out on Sunday evening. Currently, it's being offered with a trial period for your first month of just $1. So it's pretty great deal in there, I think. We've
I
had some
agree.
great recent winning trades, and then we had one just a couple weeks back for Google that I think it's sitting on about 160, 170% return,
Wow.
roughly. I haven't looked exactly today at what the return on that one was, but it's been performing quite well. And just of late, all of the trades, I think it's something. in the neighborhood of like 28 out of the last 29 have given the members of that newsletter an opportunity at profits with those recommendations. So we'd love for you to check it out. And again, it's just $1 for your first month. So go ahead and click that link in the chat if you do want to check it out. I think it's a
That's
great opportunity for you.
it's a great opportunity and a great deal. I mean, $1. There's not even a dollar menu anymore at McDonald's.
Right,
You
I
can't
know,
get
yeah.
anything for a
Yeah, it's
dollar
like the
anymore.
$5 menu now. Yeah,
Yeah.
you used to get excited over the $5 foot long at Subway, and now it's the $15 foot long, but side note on that one. But
Awesome, awesome. Well, yeah, I know you put that link in the chat so people that want to check it out can go there.
yeah.
And it looks like we have a couple of questions today, Blaine.
Oh yeah, awesome. Let's go ahead and let's see. Let's see what the questions are.
So first,
I think Cindy had asked you a question.
yeah.
Looks like you got that one
Yeah,
answered.
Cindy asked, what were the strikes for the Shopify spread? And I said that the October 17th, 130 and 135 strike calls. I was able to enter that position at 395. Ideally, I want to be in under 4, but I would go up to 410 if I have to, or 415 sometimes. But usually 410 is that upper cutoff for a 5-point spread.
Awesome.
Um,
I see another question. Jim was asking about, do we use the 1% rule options calculator to help decide on our options trade? So, Jim, we do sometimes. Of course, a lot of Chuck's traditional, the power trend method, if you're familiar with that. Um, that, when selecting a call option purchase, certainly does involve using the 1% rule in order to select the call option strike. But we do have several other schools of thought too, of how we approach buying calls. So with the power trend, that's more of a longer term, looking at a, probably, a month or so longer hold on that trade. So, it's a little bit longer time horizon. With the trade like I highlighted today, this is for Amazon. Excuse me. Sorry, still getting over the flu from last week, so please excuse the coughing. Um, so, with today's trade that I highlighted, even though I was using the October 7th expiration for my Amazon call purchase, that's still, just about a month or so out from now. I have a little bit shorter term horizon on that one. So, you certainly could hold it all the way through mid-October. But, with that one, it's more of a shorter term kind of swing trade setup. I'm looking to see, get a little bit of a, lift in that one, get somewhere, just kind of a shorter term swing trade. So with that one, I'm looking to, trade options that are a little closer to the money. They may or may not, meet the 1% rule. It's just going to be, pending on which situation and subject to that, each individual setup. So, not exactly following the 1% rule for the setup like I highlighted today. So, the answer to your question, Jim, is kind of maybe. It depends on which exactly system we're using. If we're using
Yeah.
power trend, absolutely. Using our more shorter term approach, like we, spotted with this one today. If you're a member of our lightning trade alerts or elite trade alerts, anything like that, some of our trade alert services that, feature more of that system, more of the shorter term swing trading setup, then you probably won't see the 1% rule apply as much. So sorry for the long
And
answer. Just wanted to clearly explain that.
And just a note too, for the 1% rule is used for directionals only. So directional
Yes.
call option purchase or put option purchases. So when it came to the call option debit spread that I showed you guys today, that does not use the 1% rule. So that 1% rule is only applicable to directional call and put option purchases.
Yep. Great clarification there, Helaine. I see Holland is asking for a rule of thumb regarding a stop loss. So that's a great question, Holland. And so, just with any of our options trades, our general rule of thumb of how we will implement a stop loss is we typically will implement a mental stop loss. Sometimes we'll actually enter in, the actual stop loss order, to limit price. But, typically whether it's, a directional option purchase, a bullish call spread, just like Helaine highlighted, we're going to be operating, with a stop loss of, somewhere in the neighborhood of 30%, 35%. So, if it starts getting a little close to that, if it's, a 25% loss, we're going to be watching that trade very, very closely. We have the luxury of doing that because, this is our job. Of course, we can sit and watch the markets and watch our trades. That's what we're doing. So that's why we opt for the mental stop loss. There's certainly, no reason you can't just, submit just the stop limit order at your stop loss price. That's certainly okay as well, and something we've done before. But it's typically around that 30 to 35%, stop loss level is where we look to implement stop loss on these types of option trades.
Exactly. Awesome. Well, I think that was all the questions.
Yeah, I think it is. Okay. Awesome. Well, perfect. Well, thank you everybody so much for attending today. Again, we love the interaction. We love getting to engage with you all and field these questions too. Certainly hope you enjoyed today's TOD live call. Really excited to have you all here in the room. Again, really exciting day for markets. We've been looking forward to this Fed meeting tomorrow and getting this rate
Hmm.
cut for quite some time. So it'd be exciting to finally get some certainty and get that behind us tomorrow. Be looking forward to getting back here on Thursday with you all to break it all down live. I'm sure there'll be a lot of action between now and then. But we have to get back to the markets. There's, a lot of trading happening. Some
Yeah.
positions need some attention, some rollovers and things like that. So we got to get back to the markets. But again, thank you all so much for being here. Really appreciate you joining us here live. If you're watching the replay too, thank you so much for watching the replay at home. Looking forward to see you all back here in just a couple days.
Yep. We'll see you Thursday. Have a good one.
Yep. Take care, everybody. Have a great week.